Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session in the Forex trading room for September 6th of 2020, Labor Day weekend here in the U.S. So market open is probably going to be very slow the first day. Trading will likely not kick in until sometime Tuesday. But that being said, let's go through our standard program here. I'll look at the prior week's results, our currency strength meter for the month and week, a fundamental announcement calendar of the events going on in this week to come, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Kicking us off is the long-term ledger. We are up significantly since last week on profit taken on trades that were closed. So we're now up to 40% growth for the year. This is definitely a good year for the long-term account. Not as good for the other accounts, and we'll get to those, but the long-term account has been shining since the beginning of the year. We've still got one trade open with Euro New Zealand. That is a re-entry in the same direction as the other successful trades. That doesn't mean it's going to be a winner. We dip our toes. Some of them are losers, some of them are winners, but overall, the intention is to make money. So again, we closed out a bunch of the Euro New Zealand trades. That was our second ride and took about 12% profit overall, bringing us up just slightly over 40% growth for the fiscal year. On the intermediate term ledger, the story is not as good, though it was a good week. We did recover about 3 percentage points, but the account is still significantly drawn down. This is not a cause for alarm. This is not our first trip around the block. Drawdowns are to be expected, especially in volatile markets like the one we're having right now, mainly as a result of COVID. So we'll be back. This account will be coming back, at least historically. We've always come back from our drawdown, so this is just business as usual. Obviously, I would love it if we had a better story to tell, but it is what it is. So patience, this one will be coming back, or at least that's the intention. The short-term ledger is also down for the year, of course, not as bad as the intermediate-term account, but we're still down about, I think, 20 percentage points overall, so not as hard to recover. And we did have a drop this week to the tune of a little bit over 8%. All the trades we opened went awry as the week was very volatile. Again, this is something that happens in whippy markets like the ones we've been having. This is another one where I'm pretty sure we'll be coming back again. It's not the first time it's been drawn down and not the first time we've recovered from that. But again, I like to be honest in everything and very transparent. It just is what it is. Notes and opportunities for improvement. The market is stressed and very volatile. I said that before. I said that just a few minutes ago, so no change there. However, good breakouts are happening. But when they happen, there's also frequent retracing. So it does frequently hit our stop losses, even when we're trading in the right direction. This does not affect the long-term account as much because our stops are wider there, so we have a chance to come back from those trades. But we may need to change our approach in trading on the intermediate and short-term yet again to adjust to what's going on with the market. Take smaller wins, maybe take smaller losses as well until the market shifts again and we can catch a ride on a more consistent trend. More breakouts do look to be imminent. There are several pairs that are going into those extreme ranges where we're either going to have a significant breakout or we're going to have an even more significant retrace or correction, reversal, whatever you want to call it. Either way, there will be opportunities for us to make money. The United States is undergoing ever higher social unrest. I mean, the rioting in the cities and the Black Lives Matter and the Antifas and all the other nonsense. I'm sorry, but I do consider it nonsense. They're just scaling up and probably will be doing so through the November presidential election. I do not want to buy into too many of the conspiracy theories, but I do see a lot of political intention in the background where the more rioting and upsets that happen, the better it's going to be for the challengers to President Trump, which in this case is pretty much Joe Biden and company. So it is in the liberals' best interest to maintain higher social unrest, and big surprise, that's what we've been seeing. As many I'm going to say amateur comedian has pointed out, COVID and everything will be cured magically the day after the November election. It will no longer be in anybody's interest, those flames. On the flip side of that, sometimes the flames take a life of their own. And even if the liberals win the presidency, they might find that it's not as easy putting things back into Pandora's box as it was to open up the box in the first place. But again, we'll see, and I'm sure we'll be able to trade it anyway. Commodities such as oil, silver, and gold continue to attract buyers, which means they continue to rise in price, or at least to hold on to the more recent gains. Oil did do a bit of a retrace this week, but not a deep one, and we'll look at that chart very shortly. But still, everything is at a much higher point than a few months back. So we're definitely having a seller's market on oil, silver, and gold. Our live event, we're going to have a live trading event, a 3-day event where I'm going to try to teach as much as I can. And it's going to be just like a crash course in trading and my approach and how I've managed to be successful doing this for 10 years and counting now is going to be happening at the end of this month. So we're getting very close to that event, September 30th through October 2nd. That is a Wednesday, Thursday, Friday. And the Friday will be a jobs payroll, non-farm payroll Friday. So we're going to have a nice fundamental trading wrap up the event. Details are on the website, SFXA.com. So just browse over there. You'll see the sign up, and we'll be welcoming anyone who wants to come. Regardless of how many people sign up or show up, because COVID is still ongoing and things are ever changing. We'll still be having the event, even if I have to do it online or record it and send it out. At this point, I don't much care. Much like I adapt to the market, I adapt to reality as well. But I'm not going to postpone it again. It's happening due. Relative strength meter for the past month and week. If I can direct your eyes to the right-hand side of the chart, the monthly is the rightmost column, and the next one in is the weekly. We can see we had some significant movement on the USD Swiss, a very deep retrace. You can see that silver did suffer. Silver did not have a good, has not been having a good month or a good week. It's down about 4%, 4.5% for the month at this point. But again, it's a normal retrace after a very significant rise in price. So that is just to be expected. It's still very near its high and far away from its most recent price range. So silver is still something I would be buying, and indeed I am buying silver like it's going out of style. So I've been stocking up all the way up, slowing down as prices rise. I'm starting to move into gold now, actually, but silver, I still expect it to go much higher than where it is right now, especially if the economic and civil unrest continue as they have. For the week, we had some significant movements out of some of the CAD pairs, some of the pound pairs as well. But again, nothing too significant. So more of a flat or even retracing market in many cases. Fundamental announcements scheduled for the week. We will be having the Bank of Canada's interest rate decision on Wednesday morning. That will be traded live. And Thursday morning, we have the same coming out of the European Central Bank. So those will be the two events we will be trading live this week. And with that, we move on to our charts. So commodities, you can see the pullback I was mentioning happening with oil, but again, not a deep one. It's still been in a sideways market for the past couple of months or so after that spectacular rise May into July. So it's holding on to its gains. I think that's the takeaway from this chart. And the talking heads, the experts, and I'm doing air quotes here, continue saying that oil is probably going to go a bit higher before. done. I happen to subscribe to that point of view, so I do think we're going to go back at least into the 50s, maybe into the 60s. Moving on to our currency charts, euro dollar did a significant retrace this week after making another new high. And again, that's normal on its way up. We always have the zigs and the zags, but there have been a lot more zags recently than normal. So we can see that either the move is losing strength, or more likely it's waiting for the next event to pick it up another notch. So we'll be on the lookout for opportunities in either direction. At this point, it is in a no man's land territory, and I would be waiting for a breakout in either direction before trading it. Pound dollar, same thing, made a new high, not the highest on the visible portion of the chart, but very close to it, and is now doing a pullback, which on Friday failed. It started going up again, but ended pretty flat for the day. However, it's also in a point where I would probably neither buy nor sell it unless very short term, until I see a breakout in either direction. USD JPY has gone flat again. It looks like the yen is having problems picking a direction. So yet another chart where we need to wait for a signal. But I'm more bearish than I am bullish on this chart. So I'm waiting for a break towards the bottom. USD CAD has only one direction. It's going down quite consistently. Bit of a pullback on Thursday, but ended up back in line with the start of the week on Friday. So it ended the week flat. Didn't move much. It moved significantly intra-week, but no net gains or losses for the week. It just ended up where it began. We're still waiting for the next move in this long-running trend. And again, I'm bearish on all of these. I'm bearish on the U.S. dollar. I think the U.S. dollar has a ways to go before it goes down. So again, this is a waiting game for when we get a proper signal. USD Swiss, same thing. It's gone sideways after the most recent drop. So another one where we have to wait for a signal to get back in. Aussie dollar retrace, as many of the dollar pairs did this week. So it did a bit of a retrace back to the outer trend line, and we'll have to wait and see if it does break up or down. So again, a sideways week, which didn't give us much to latch onto. Kiwi dollar, same thing, new high, but then a quick retrace, and ended up the week at support resistance, and we'll have to see which way it moves. Properly begins on Tuesday, again Monday. Tomorrow, Labor Day holiday in the U.S. market, very quiet. Aussie CAD hit the top, retrace back to the trend line. Another one where we have to wait for a signal. Ambivalent on this pair. Both the Aussie and the CAD have strength plays in the winds, and could go in either direction or may even go flat. Euro Swiss is a nightmare. It's just moving in both directions depending on what day we look at it. So this is not something I would like to trade. It's just very volatile and uncertain. Euro Pound has made a new trend line and new outer trend line. So we'll have to see if that acts as support. And if we see a movement back towards the top, both the euro and the pound having shown strength of late. So this one is another one that could go either way. Euro JPY moving up and away. I do expect some yen strength coming back into the market at some point, but it's been a long time coming. We really haven't had any yen strength since back in May, so we'll have to see at some point. It will come back. These things do go in cycles, so we have to be on the lookout for that opportunity. But the upward movement may not be over yet. Euro Canadian breaking a few trend lines and at support, so we have to see which way it breaks. I'm very bullish on the CAD, so I think there's a lot of room for this one to go down. But at the same time, I'm bullish on the euro, so it's going to depend on which one is stronger. And at the same time, we really don't want to be playing strength against strength. So until there is a significant movement, I'm probably going to keep out, other than for a very short-term plays. Pound JPY going up, but retracing this week, which again is normal, but the retrace might not be over. So again, we'll have to wait and see what happens. Aussie JPY very near the top, retracing as most pairs did this week. So again, have to wait to see which way it breaks. Euro New Zealand still going down, did a bit of a retrace on Thursday, then Friday continued on its way down. Too soon to tell whether the move is over or the deep move will continue. We've got an open trade and we've got triggers set to take us in, scale us in higher position sizes if it continues to drop. That's a big if. So another one where even though we're trading it, we're also observing it very. Pound Canadian moving in all directions, but this week mainly down towards support, but still more sideways than anything else. And last but not least, Pound Swiss also very sideways. It's at the top of its most recent sideways range and did show some weakness there and started heading back down. So another one that's probably not ready for a longer term trade, but it is at a crossroads. So we may get some action from it pretty soon. That's it for our chart setup we see in progress. The UK, of course, has a Brexit separation deadline at the end of the year. And that's already been causing stress to the pound. So we'll have to see if the UK manages to weather that event properly, which will affect the pound, of course. US, the dollar pairs, the election cycle is overshadowing everything else, where everything else is taking a backseat to that. But the US is still plagued by economic woes, by the COVID pandemic, which again is affecting pretty much the entire world, and of course all the civil unrest. But everything seems to be feeding into the fact that we have an election in November, and some of these events may have been played more for political effect than actual reality. So again, time will tell. Australia keeps having an ever-changing economic outlook. Sometimes the news is good, sometimes it's bad. Which means that the Australian has had trouble breaking out of its current price range, which is already much better than it was a few months back. But instead of continuing, it looks to be taking a breather. Canada, I've re-added Canada to this chart. I think there's an overdue correction into cash strength that might be starting. And of course, we have the interest rate decision coming out this week. The European pairs, the Euro pairs, stimulus plans and better economic outlook than most others. And again, an interest rate decision this week, which we don't expect it to be a change, but still, these events do get heavily traded. And last but not least, my parting words here. Special Effects Academy has always been experimental. When I started this out, and let me make this very clear, I make a very nice chunk of my income off of trading. I've been doing that for more than a decade at this point. So I really don't need to be teaching or selling products or whatever. I do that because I enjoy it. And I like helping people out at the same time. More importantly, when I started Special Effects Academy, it was mainly to offset a bunch of Forex gurus out there that are teaching, pardon my French, pure shit. They're drawing people in with promises of 100% gains a week or a month or whatever, and leading them only to disaster. It's not that you can't make those gains in a week. I've done it. You just can't make them consistently. And if you try, what you're doing is throwing risk control right out the window. So eventually you're going to have a bad week, and that 1 week is going to wipe you out. But hey, you're exposing yourself to 100% returns a week, then you have to take 100% risks. I don't like that. That's not my way of making money. I go for smaller, more consistent gains, and even I have drawdowns. So again, but risk control means that I never lose all my money. I may lose a good chunk, but I always have the opportunity. I am a great trader, and I'm not modest even slightly. So, sue me if that offends you, but I do consider myself one of the great traders. I just don't advertise as much, and really, the great traders don't need that. I'm in good company there. But at the same time, I live off my trading. Not many can say that, and I know how to teach proper trading based on the experiment. So I didn't know what I was doing when I started out, so there's been many iterations of my course, each one getting a little bit better as I learn what works and what doesn't. And that's why I never charge for updates or revisions. So whoever bought into my first course back in the day has had access at no extra cost to every single update or revision I have made, because I don't want to charge people for the same thing. I charge them for teaching them how to trade, Until I'm satisfied I've done that, there's no reason to charge them anything else, right? So there only ever will be one course at Special Effects Academy. There's no reason to have two courses. I'm teaching one thing, trading. So it's only one course, but it just keeps changing as I learn how best to teach what I do. The next revision is right around the corner, and I'm going to be upping my game. So this is my first official announcement of that. Many traders that are trying to, or I guess people who are trying to learn how to trade, their problem is going to be that they don't have capital to really trade in the big leagues and start making good money. I'm going to let my students trade with my money. Everybody that signs up for one of our courses is going to have access to an account that I will fund. And I will control. So, you can't withdraw money from it, but you can certainly trade, and you'll be trading with my money. There will be strict controls and strict rules. You're not going to be able to trade at the risk level I trade because, again, I'm not stupid. I'm not going to throw my money away, especially on somebody who is practicing their trading. But if you do want to take advantage of that, I'll set you up with a $20,000 account, let's say. And you can trade that, and I will split the profits. So any money you make, I will keep half of it because, hey, it's my money, right? And you keep the other half because, hey, it's your trading, right? So that will be a win-win for both of us. If you do get to a certain percentage of drawdown, then I will suspend trading on that account, and that'll be it. But at least you will have traded with a real money account and know how that works. And maybe you'll apply what you're learning and apply it properly, and you will make money, and we'll both make money. So I'll be sending out more information on that publicly very soon, but this is your heads up and your alert of things to come. And anybody who's already signed up, anybody who's already paid for a course, you're grandfathered in, so you will be getting a funded account with my money should you choose to take it at no additional cost to you. So that's it. That is my announcement for the week. Hope it's enjoyable, and I will talk to you guys Monday night when we kick off our training. Again, it's going to be a slow start of the week. Monday tomorrow is Labor Day, so U.S. markets will be closed, but we will have our regular 8 p.m. session as the Asian markets will have opened for Tuesday trading by that point, soon to be followed by the European markets. So we'll see what we can get tomorrow night, and that's going to be it for me today. Any comments or questions from anybody? Okay, thank you very much, and we'll be back tomorrow. Have a good one.